Welcome to episode 7 of the coin flip trading, a strategy that we use in order to determine the direction of the trade based only on the coin flip. You get heads, you buy, you get tails, you sell. It's as simple as that. Okay, so 6 trades in, we are still profitable, and let's see what happens in this trade. So the way it works is that we have a topic in every single video about something Forex or trading related and how it applies to our strategy. And today let's talk about the take profit. By definition, the take profit is a market order that you get or make to your broker, which is here in order to make sure that you leave with a respectable profit rather than waiting for the market to bounce back, to come crashing back against you, and then exiting out of fear because you know that this is something that you don't want to do and don't want to experience. Now, what does it mean for our strategy? Well, the thing is that you've probably heard that you should never be emotional when trading. This is, of course, right, and that's why the take profit is there, just so you don't exit because of an emotion and because you feel that you should exit, but because you've reached a certain point where it makes sense to leave and take the profit. So what does it mean for our strategy? Well, we don't have a trend related one or price action or anything like that. We don't know if the price is going up or down. We guess it, and we guess it based on the coin flip. So we don't really know if the market should go our direction or not. So we want to take exit and take profit when it reaches the average amount the chart actually moves in one direction or the other, and we hope it is the correct direction so we make money. And what is the right amount or the average amount that the chart moves? Well, that is the ATR. So this is the average true range. This is the average how big the candle is. And based on last 14 periods, we count the average amount and we hit and actually set the take profit in our direction exactly the ATR amount away from the price. You probably understand what I mean. When the chart goes in our direction, we don't know if it's gonna go further or bounce back. So once it reaches the average amount it can move, we just take profit and let it go. We made money, we can move on. This is our strategy and how we are doing things here. Okay, so let's get started with the actual trading. I have no idea what I'm gonna go with, but I think that I may go with the US 500, and again 4-hour time frame, just like we talked about before in the previous videos. Now all we need to do is just to see whether we buy or sell. Flip a coin.
It's tails.
And as you can see, it is tails. That means that we are selling. So again, let's bring out the ATR to see how much we need to take profit. So the average true range 14. So it is about 40. So let's come back and let's take profit about 40 pips away from the price. So it actually is going to go down. You can see 40. And the same thing for the other direction. So just like that. Now you can see it is very simple. The strategy is very simple and it's supposed to be like that because we don't focus on a technical analysis and we only focus on the coin flip. So the strategy is in fact very simple. So we have performed a trade, and once it's finished, once we get the notification that we made or lost money, I'm gonna update you just like every time. Okay, so here we are. It's actually Monday. The trade was open the previous week on Tuesday, and it took more than 3 days for it to close. And as you can see, it closed in red. It happened at 9 p.m. on Friday, so I didn't publish any video on Wednesday and on Friday as well, because that's the usual time where I upload. So I kind of moved on and skipped 2 episodes just because I was waiting for the trade to close. And there are a couple of things I've noticed with the trade. I was actually trading the index, the US 500, and those in general have tendency to go up. So every time we get a coin flip, it can only be the heads or tails, obviously, but when we get tails, it means that we expect the trade and the chart to go down, which isn't that likely on an index chart compared to Forex, for example. That's why I will probably focus more on Forex because there it's a little bit more unpredictable. And by the way, look how close we were to actually making the trade profitable. We were so close from the take profit level, which is kind of interesting, but this is the life of a trader, I guess. We're still positive, we're still profitable. Let's see what the next trades actually bring. And I'm really curious to see what happens after 10 trades, whether we're positive or not. So thanks a lot for watching and your support, and see you guys later in the next episode. Hopefully it will happen on Wednesday. See you guys later.